Hello dear members, this is Saturday. This week, very special. I would like to talk about dollar cost averaging on REITs. So I'm sure you know what is REITs. So these are the REITs counters in the domestic stock market. Real estate investment trusts are. So some REITs we are familiar like Capital Mall, the KL, Sungai Wan Plaza, Gurney Plaza in Penang is under this Capital Mall REITs. And IGB, Mid Valley Mega Mall is under this REITs. And KLCC, of course, Pavilion REITs, Sunway REITs. So YTL REITs period is called Star REITs, which is having the Star Hill Gallery in Bukit Bintang. So why we want to talk about REITs investment? It's because REITs investment to current market situation could be a safe haven to park your money in. So we prepared very interesting example for you to refer. The first one is using dollar cost averaging on Sunway REITs for 6 trading years. So this is a very interesting. Another one will be dollar cost averaging in YTL REITs, especially the beginning point is the big bear market just happened in 2017 July. So very good finding to see. Okay, I want our member to look at it. This is specially decided for retail investors. What we can do is dollar cost averaging. We can call it dummies investing strategy. So example, in our assumption, every month we use 1,500 ringgit to buy in. The purpose of doing so is actually something related to the share price movement. One of the best advantage of dollar cost averaging is when a counter is always sentimentally go up and down, driven by the market sentiment, but actually supported by its intrinsic value. So this is usually what we see in the share price movement. So what to do is when we found that the company's share price keep going up, maybe somewhere here we can say, oh, this is overvalued. So using dollar cost averaging, every month buying the same amount of money when the share price is overvalued or the valuation is high, you will get less units. You will collect less units. But when the price is in downtrend like this, then you will have more units collected every month. So in the end, you will have a result that your average price is always very close to the company's intrinsic value or to its average price. So dollar cost averaging, it's actually a very effective and safe and simple way of building your wealth in Malaysia stock market. So of course, every stock market you can consider using dollar cost averaging, but in what counters, right? So we try to bring you REITs because real estate investment trust is typically a low risk and guaranteed return investment target, or we call underlying asset. So that's why we assume in the year of 2013, January, by every end of month, we just spend 1,500 ringgit to buy in Sunway REITs. So the reason why we took Sunway REIT as our example is because Sunway REIT is a very well diversified portfolio from office building, from shopping mall, from industrial, from even hospital and university. This is a very well diversified REITs among all the REITs counters in KLSE. So Sunway REITs actually listed in the year of 2010. So we started our dollar cost averaging in 2013, which was some kind of a peak area. And after that, the share price came down, retraced as much as 30% and go up and retrace again. So the share price is not every month going up. Some months they went down. But we just close our eyes and buy, because the best advantage of dollar cost averaging, as I mentioned, you don't need to care about the valuation or the PE so much, because when price is high or overvalued, you will get less units collected. So this is a very easy way. So what we do here, we took end of the month closing price as our enter price. So first month of 2013, the price was 114 for Sunway REITs, and we spent 1,500, and we can collect 1,316 units. So in this simulation, I didn't round it up with lots 100 units. I just make it units for us easier to refer. And because the difference will not be very big, so we just take this easier way for a better understanding of the power of dollar cost averaging. So the first month we collected 1,316 units, and second month when the price is 111, we just keep buying another 1,500, and we collected 1,351 units, and keep doing so. In the first year, in end of 2013, we collected 17,264 units of share, and another year we keep doing so. As we can see, the share price in 2013 went down to 90 cent level. And 2014, the price went up again. So the units we collected every month from 1,600 units almost to 1,002 units, because the share price went up again. So the full year we collected 17,000 units again. So the third year we collected 14,000 units. The fourth year we collected 13,000 units. And fifth year, 11,000 units, and the final year, sixth year, we collected 10,000 units only. Why? Because the share price is ranging from 150 to 160 level. So we collected every month, the units number is getting lower and lower. But in the end of 2018, after 6 years collection continuously, we have totally collected 84,357 units of share of Sunway REITs. So let's make it larger. This is our saving plan. This is the final result of our saving plan on Sunway REITs dollar cost average. So we have 84,000 units of share, and by end of 2018, the price was 167. Okay, actually it's somewhere here. We didn't take 2019 into consideration. And what we have is the market value of total shares on hand. It's over 140,000 ringgit Malaysia. But how much we spent? In the last 6 years, 72 months, every month we spend 1,005 ringgit. And total investment is 108,000 units. It's very similar of buying a car with installment. Okay, but I'm sure you understand, if you're buying a car with 6-year installment, every month pay 1,500. After 6 years, your market value of your car will be only left 50% or even less. Okay, but you invested or you paid really in cash term 108,000 ringgit. You pay for the car, but the market value only left less than 50%. So in another alternative, when you spend your cash flow with such 1,500 every month cash flow into a company or into an underlying asset with productivity, like what we did with Sunway REITs, and you collected 84,000 units of share, and with market value 140,000, you make 40% return in total 6 years, and your average price on hand is only 1.28 ringgit Malaysia per share. Okay, how do we calculate this average cost? Because we invested 108,000 ringgit Malaysia and divided by total unit collected in hand, 84,000 units, and we get this. This is our cost per share. Okay, why we calculate this cost per share 128? Because it is lower than the market price, because we have an average price. And another advantage will be your holding cost is lower than the dividend you receive. Example, your cost in end of 2018 is only 1.26, is somewhere here. But your dividend per share for the past 12 months is already 0.095 cent divided by 1.26 your cost. Okay, how many percent dividend you will have? Let me calculate for you. This is your cost, 1.26. So you have a 7.5% dividend every year. So this is much better than your fixed deposit in bank, right? So this is a fantastic result. Just by closing your eyes and buying 1,005 ringgit every month on Sunway REITs, this is the result you can achieve. A little bit surprising, right? You don't have to worry about the share price movement and just keep buying this kind of underlying asset with productivities. Okay, why I keep emphasizing productivity? Because if you go for individual counter, you need to make sure that business model or that individual company is with productivity. I'm talking about the fundamental must be good. Okay, another example that done for you, very interesting. It is on YTL REITs, but we purposely choose the crisis time to start buying. Okay, let's see what we can achieve. So the crisis time is actually here. From 2017 July, we started buying with a peak price, and after that, the price dropped from 70 cents something to as low as 40 cents something. The whole bear market, the share price retraced 40% from the peak, dropped 40%. So this is a crisis level. But we just close our eye and keep buying and buy for 5 years. And after that, the share price come back to the similar level and what we can achieve. Okay, so why we choose YTL instead of other shopping mall or retail REITs? Because before 2008, we have only YTL REITs, which is specialized in retail segment. Those counters like IGB REITs, it's listed only in 2012. Pavilion REITs is only listed in 2012. KLCC is only listed in 2013. Okay, so we don't have a big shopping mall REIT that has weathered the 2008 financial crisis except this YTL REIT. That's why we take it as an example purposely. So what we did this time, we make it every month we put 1,000 ringgit only. So we assume when in a market downturn, we don't have much more cash flow like bullish market. So we just buying 1,000 every month. So we started in July 2007. Price is 71 cents and we have 1,400 units. When the price dropped to 49 cents, we can collect 2,000 units in a month. So this is what happened from 2007 to 2008. And after that, 2009, the share price is somewhere about 50 to 60 cents. So we collected 21,000 units in 2009. And 2010, the market started to recover. We collected 19,000 units, and 2011 we collected 19,000 units, and 2012 half year we collected 8,990 units. So what we did, just close our eye and keep buying. Okay, this is the result you want to know. So what we achieved or what we collected is in total 99,396 units of share in hand, which is YTL REITs, without any bonus, without any rights issue, because REITs usually they don't do that. But the dividend is already taken into consideration because the share price we took are all adjusted price. So it's like we automatically invest our dividend into the share price. And the total market value is 71,000 because the last price in June 2012, it's 72 cents. And we invested 60 months and every month is 1,000. So we put into 60,000 ringgit cash, but we have a total market value 71,000. So we have almost 20% return. Okay, this is interesting because this is our starting point and the price come down. We lost 40% and we come back to the similar price, not even back to the beginning price, but we already making 20% profit on hand and we have an average cost only 60 cents. This is the power of dollar cost averaging. And we are enjoying how much dividend every year? We are enjoying currently, look at this, dividend per share is 7 cents. In the year of 2012, let me show you, in the year of 2012, the company paid 7 cent dividend. Okay, next year, 7.3 dividend. Okay, 7.3 cent dividend. That means after our accumulation, we will be enjoying more than 10% dividend every year. So this is out of a lot of investors' expectation, and it is so easy that a lot of investors cannot believe this is how effective dollar cost averaging can be. So come back to our conclusion. This is called value invest. This is one of the value invest methodology that every investors in Malaysia stock market you can apply into your own portfolio. And when market in downturn, you need to be confident, because lower price means buying every month you will have more unit of share, you will accumulating more quantity in hand. But make sure one thing, you are using this in a productive asset, underlying asset. So I think it's very inspiring. I hope our members to look at this and withdraw your confidence in the current market situation. So thank you for watching. Thank you. Bye bye.